Hello and welcome to the Ascendant Trader Group. Our website is blog.ascendantraders.com, and that's where we put together effective video technical knowledge trading plan videos on a daily basis. So today's cartoon for our video has a little commentary on what some of us may feel, especially when we don't have a trading plan, we don't have a system, and we're just guessing about the market. You go to your computer to check your balance and help, I've been kidnapped. There have been a couple times where I didn't use a stop, and I was in the money, especially when I was trading options, and then wake up the next day and you're losing money. You're like, what the? That's why you gotta have a system. You gotta know what's coming down the pipe that can affect your trades, and you need to get out of trades you need to get out of. So what we've been doing as a part of this video series is trying to put you through a basic training where you educate yourself. We chose an investment vehicle, and please take the time to go back and check some of these other videos. I'm kind of going quickly because of our time with YouTube. But we have videos basically for all of these, and we educated ourselves about some different investment vehicles. We chose ours, that being futures. We began to develop a trading plan on trading futures. We talked about brokers, and there'll be a link on this at the very end about your a great futures broker. And now we're in the pick your supplies. What type of toolbox does a trader need to have to be a successful trader? Or what type of tools do you need to implement your trading plan? Then, of course, you got a virtual trade, paper trade. You got to practice before you put any money in. Then you can implement that trading plan with some real money and make any adjustments due to the current adjustment. Now, as I said, we're still on picking your supplies, and we're still identifying what should be in your toolbox. And so to start off, we were talking about what are some things you need to be concerned about. Well, we got to have a charting platform, and if you're going to have a charting platform, you got to be able to read the charts, and then you got to be able to utilize some technical indicators for confirmation. And we focused on the price chart, and we're talking about charting platforms. And specifically, we're talking about the types of charts that you might use. Different types of charts are a line, bar, point and figure, candlesticks, and Heikin Ashi. And in the last video, we went through all of these and gave sort of one-page information about each one of these and why we believe Heikin Ashi are the best candlesticks, the best type of charts that you can use when you're trading something volatile like futures and Forex. So to give you a quick overview of what we talked about last time is that Heikin Ashi is just a Japanese word for average bar. And this is another technique. We all know the candlesticks are very visual, and these also are visual candles that help visualize the trend because they calculate the formula for Heikin Ashi different from the regular candlestick. A candlestick is basically about open and high, low, close, and filling in the body or not. Where a Heikin Ashi candle takes in consideration the price levels of some of the previous candles to form the new candle. And by plotting this, it gives us a better visualization of the trend that's going on. And what it does, it gives us, again, a better depiction of the current market. It gives us an idea of market strength and consolidation. Strong, long wicks are a good indicator of strength. And little wicks and little bodies, sort of like candlesticks, indicate consolidation. They eliminate fluctuation on the nominal price action. You know, on a normal candlestick and time frame, you got up and down, up and down. But because the Heikin Ashi candlesticks are an average of the previous candles, it's not as choppy. And although you'll see, as we pull up some live charts in a moment, although you may see some pullbacks that a candlestick will show, what's most important, again, one of the two hardest things, really three. Entry, when do I get in? That's the biggest question everybody has. And then the next question is, when do I get out? And that kind of, so that's exits. But in the middle of there, as a part of when do I get out, is how, what are some signals for me to stay in? And some people use things like moving averages, Bollinger Bands, mobile bands, price action channels, wherever it may be, But also the Heikin Ashi charts give you another indication that you can stay in the trade because we have that nice smooth bottom, we have the nice long wicks, and that kind of allows us to eliminate the noise of the price action, eliminate the noise of the distortion of the little bit of up and down that you might see with candlesticks. And one thing that's also important that I don't have on there is that Heikin Ashi candles are better on the shorter time frames, 5 minute, 2 minute, 3 minutes tick charts than they are going to be on a daily chart or on a monthly chart. So as I was kind of indicating there, when you look at the Heikin Ashi candle, there's a couple things that you want to look at. First of all, a trend is normal. What we want to see is the candles going up or down, uptrend, downtrend, but we don't want to see any shade bottoms. We want to basically see the bottom continue to move up or the tops to continue to move down. And the trend is strong, as I was just saying, is that when you have no lower shadows, but more importantly, the wick, the upper shadow on an uptrend, ascending, is long, or for the downtrend, the exact opposite. And as the candle bottles get smaller and you start to see some shadows, that is showing you that the consolidation is getting weaker. And then when you have both upper and lower shadows, upper and lower wicks, that is consolidation. Again, some may say a change in trend is going to happen, but it's not the most reliable symbol, and you really want to use your indicators to kind of confirm that. So here we have just a couple examples before we go to our live charts, and we shared this in our last video. And one thing that you're going to see is that a Heikin Ashi candles, which is on the bottom, don't show the gaps that you're going to see in the candlestick. So again, you can see as I'm on the bottom one, and we have the strong uptrend, and you can see there's no shade bottom. However, when we go to the top, you can see the gaps, and we do have some wicks. So that's telling us we're in an uptrend. And as the bodies start to get smaller, we're going to see the consolidation. Now, consolidation is pretty much the same on both of these charts, so you're going to get the same thing there. But again, we have another uptrend. We have nice smooth channels, and we have the wicks. And also on the downtrend, we have nice smooth tops, and we also have the wicks. So I think the best way to do is just go ahead and pull up some charts of the last couple of days and give you some more examples of the difference between candlesticks and Heikin Ashi candles. Okay, we just wanted to go ahead and take a quick second and remind everybody that we are on Twitter, twitter.com/AscendoTraders. And this is a good way just to keep an update on what's new going on here with us at Ascendo Traders. As you can see, when we update with some new videos, it comes on here pretty soon with our ka-ching and our investment portfolio. Those what stocks you're investing in will be updated here. Economic data, little things like that will all be updated here on our Twitter account on Ascendo Traders. So go ahead and check us out. So let's begin. On the top of my chart, we have the Heikin Ashi candles, and on the bottom we have the regular candlestick. Notice that we have a 333 tick chart, and we are looking at the YM on both charts. So one thing that you should be able to see, again, what we're talking about with the smooth edges, either downtrends or uptrends. You should see that. And when you compare that to the candlesticks, certainly in an uptrend like this, it's not as painful because we are pretty much going up. But it's nice just to have that nice visual of us going up here. Same thing on the downtrend. Very nice visual coming down. And yeah, we came down. We got some choppiness, and this keeps you in the trade, and you're not so caught up in the choppiness of the action. And then in our last move here, as we start at the bottom and we go up, again, you have some choppies in there, but for the most part, we have nice smooth channels that never change color. A lot of systems that I've seen with the Heikin Ashi, they'll go on the first color change. So here we have all green candles, where on our candlesticks we have a couple reds. We switched over to the ES on the same time frame, and one thing you can see, these gray candles on the bottom chart here are basically on par candles, meaning they weren't positive, they weren't negative, they were basically break-even candles. Again, a lot of choppiness that we see on our candlestick charts. However, on our Heikin Ashi, we see great smoothness, and then we can see the choppiness, but then again, we're still in the trade, and then the choppiness tells us the trend's over, and we reverse. Again, visual representation keeps you in the trade and allows you to maximize your profits. So as we bring this to close, we want to kind of refresh what we talked about. Again, we're talking about the trader's toolbox and what do you need to be an effective trader. And if you're going to trade futures, we got a great link here for you to get E-minis as low as $300 margin and 20 free contracts. We have a charting platform for you to implement so that you can use the Heikin Ashi candlestick charts. Great futures trading room, 10-day trail for $30. Good money the past couple of days, even over their volatile break. And we have a futures trading plan to jumpstart your trading with futures.